Hey, what's up YouTube? Back with another video today, and today we're going to be talking about stocks. Buy low and sell high. And I know that's a really hard concept because buying stocks are buying little bits of companies. And the hard part about that is that you might end up with a situation where you could buy something really low and the company just disappears. It falls apart. It either gets bought out from another company or it just suffers some economic downturn and everything just starts to go really bad for it. Now, we're in a situation right now, and if you were to refer to the buy low and sell high kind of mentality, then you might think that GE might be one of those companies because you've got a blue chip company that's been around for a really long time that's suffering, that could be ending up in a point where you can buy really low now, end up with a sweet dividend years down the road. Now, if this company did make a return, I would expect at least 5 years, and I haven't bought into this company in a little bit because I wasn't quite sure where the direction of the company was going. Now I can kind of see where it's going, but I want to see a little bit more out of the company first before I start stepping into the market again with that company, because you're just going to end up getting burnt if everything falls out from under it. So, and when I saw this happening back in January, the whole entire thing, started to come back up, and everyone was like, okay, well, GE made some mistakes. They've had some really big problems back in 2017. Maybe 2018 will be a big year, and a lot of people bought in, and then it got cut because, hey, the the CEO wanted to change the direction of the company. They wanted to change the way things ended up working out, and yeah, a lot of people weren't too happy about that because, they wanted to get rid of the Edison line, the light bulb industry, which was kind of funny because that just shows how old this company is. It's been around for a really long time. So with that being said, they're looking to sell that off, and that could be a potential really good buy. I think that GE, if they end up getting things under control, can make a bounce back, and you might end up with a situation where, hey, you're going to make some sweet money off of that, get a fat dividend, and, even though they cut the dividend by 50%, it's still not even that bad. It's like 11 cents a share or something like that. I mean, 11 cents is 11 cents that you didn't have before, so I don't know. I personally like dividend investing companies because typically they've been around for a little while, they've grown to a large portion, and now it's paying back its shareholders, so I like dividend based companies. Typically they also have a tendency to not go under overnight. But yeah, that's just my personal investment strategy. I like to invest in pretty much primarily only dividend-based companies as my defensive part of my portfolio, and then for my aggressive part of my portfolio, I have a very high growth based companies, and how that ties into the stock market. And a lot of people don't realize that the stock market is a very fickle thing, and every once in a while, say 5 to 8 years, it goes through a recession where it might be stagnant for some time, and there might not be a whole lot of money being made from some of these companies, but you can bet your buttons that a lot of other people are making money off the stock market even during a time of a recession. So how do you profit from something like that on a stock market when everything is going down and everything is falling apart? And I think this is a very important thing because here within the next year, maybe a year and a half, we're going to end up, I think, in a situation where we're going to end up in a stock market crash. Now, that might be a really scary thing. It's just all skeptical. Who knows? It might keep on going. We might end up with a situation where 2019 is just a killer year. But I just don't think that that's how it's going to happen. If you listen to some of the people who've been investing for a really, really long time, a lot of them are holding cash. They're holding a lot of cash off to the side because they're waiting for the crash to happen so that they could scoop up some of the best companies, and they can get seated on the board of directors so that they could control how they want those major businesses to start investing their money so they can make even more money. And I think that's the biggest thing to think about right now. Okay, I've got a situation where we're at the top of a bull run, maybe keeping my money on the side side is a really important investment strategy. So when the market does crash, I can step in and start buying up like Pfizer, Coca-Cola, Johnson and Johnson, big major company brand names that have been around for a really long time. And I think that's a really important thing. And then when it gets up high again, maybe you take that money that you would have invested during that financial crisis, 2018 or whatever, or 2019, and look at it how it was back in 2000 and what was it, 2008? You know, we had that big housing market crash. You should really look into your investment strategies. Look back at 2008 and see where the S&P 500 is, and see how much it would have cost you if you would have dropped, let's just say you had like $25,000. How much money you would have made if you would have invested 25 grand into an S&P 500, you know, ETF or something. How much would that be? You know, that's a really important thing to think about. Don't get cute. A lot of people are like, they start chasing money, and I see a lot of this happening with some of the people who I just started getting involved with investing. They get in, they're like, oh, I need to make more returns. Oh, I need to do this, and they get in this like kind of, I think, potentially unhealthy habit where they could be investing into a company where they could make a lot of money, or they could lose a lot of money. They could lose a lot of money, and that's just the truth. Is, you know, you could lose a lot of money. Just be careful and smart with your investments, and we can go over that in future videos, but this is just kind of a basic outliner that I wanted to do with stocks in general. Don't revenge trade. A lot of people will have this like problem where they'll invest into the stock market, they'll put all their money into a stock, and then all of a sudden something comes out like the CEO was cheating on his wife and, you know, eating dogs in his basement or something terrible, and then everyone's just like, oh, this guy is a horrible person, and they'll sell off all their shares, and then somebody will be like, oh, you know, screw this guy, screw this company, you know, and they'll step out as two, or maybe they'll do the opposite, where they'll buy more, and then everyone decides to bail out of the companies itself, and then you're just stuck with a, you know, a dirty prune, and no one really wants something like that. So you don't revenge trade. Don't like start throwing more money at it because you're trying to make more returns. I know a lot of people get burned on marginal trading. Keep that in mind. When you're trading marginally, it's not technically the money that you have right now. So if you don't have a liquidation of something that's yours, and then you make investments on something that could go up, and then you lose more money, ooh, man, you're looking at a situation where you could like potentially ruin yourself financially for life. So I don't want you guys to do something like that. I want you to make smart investment decisions at an early age, after maybe a financial crisis, and make moves then, and then be patient. That's the biggest thing when it comes to investing in the stock market, is picking good companies in a time of an economic crisis, and then being patient. And that holding on for a long time, maybe even potentially holding on to life. And a lot of people say, well, you know, why would I do that? You know, why would I invest into these kind of companies if if they go up exponentially, and you're telling me up here that I need to buy low and sell high? Well, there's a lot of reasons why you would like to exit out of a stock. Maybe over the past 5 years, the company just has really seen stagnant growth. It hasn't seen a whole lot. No news has come out about the company. They're not trying new things. They're not trying to develop new technologies or make new, like, you know, better investment decisions. They're not trying to grow the company. A company that doesn't grow will not grow in, like, revenue either. So you need to make that kind of assessment before you start like investing into a company that may be really big, but might not also be going anywhere anytime soon, and then you just really won't see any growth either. Find companies with large moats. A good example of this would be something like probably Disney. Disney is one of those companies that's, you know, they hold a lot of major things, especially when it comes to mass media right now. You know, you've got this situation where they're thinking about, they bought, I think, Fox They own the rights to the Marvel series. They own the rights to Star Wars. They own, they own a lot of major things. They have all the Disney princesses, and I'm sure, as you know, that's a really good way for people to kind of corner the market. Large moat companies are kind of like a monopoly, but they're not quite a monopoly. There's room for people to cross it, but the people that have to cross it are going to go through some pretty terrible situations before they get to the other side. Much like the moat of a castle, you're probably going to be tarred and feathered and burned. You just don't want something like that to happen. And if they do, if the company does manage to make it across that moat, and then they start, making it up the wall, well, then I honestly think that might be a company that might be worth investing in, because then you've got a serious growth company with something that's against the competition. So that's something to think about also when you're investing. I think the biggest thing when you start thinking about the grand scheme of things is, I've got all these companies that I like to invest in. I like them for these reasons, and I've always liked them for these reasons. Now, if you can find a company that's like that, then that might be a company that's worth investing in, because if you like it, probably other people like it, right? A lot of people like Nike. A lot of people like, Samsung, Apple-based products. That might be a company that you might want to invest in. I personally wouldn't invest in the top of a bull run like it is right now, unless you're, maybe trying to get a little extra money. I still have money in the stock market right now. In the past 3 months, I've made an 8% return, which is somewhat of what people make in somewhat what people make in about a year. So, I think an 8% return is pretty good. I would like to make more money, and I think that this year has a lot more growth potential. That being said, like if you like this video, dislike if you dislike the video, and if you really like the video, please subscribe, and feel free to leave some comments down in the section below. I really like to talk to you guys. Thank you very much, and have a great day.